night trying to fix this. Anyway, it's good to see everybody. Happy New Year to everybody. Let's hope it's a better year than last, and maybe it will be. You never know. I don't have the agenda in front of me, but I know we have Kimberly Dorchak here from our auditors, Kotzen CPA and Associates. It's always nice to see you, Kim. I've looked over your report. I hope this finds you well. So I'm going to hand it over to you to begin your presentation.
Wait, Kimberly, we couldn't hear you on that moment. I don't know if you're breaking up or if it was just me.
I couldn't hear her either.
We can see you. Yeah, we can see you. Your lips are moving, your hands are moving, but we cannot hear you.
So this isn't my computer.
I think you've been jinxed, Madam Vice President. Kimberly broke it for all of us now.
You know what they say, lovely ladies break the camera. Anyway.
Should she leave and then join again, maybe?
Yeah, Kim, would you mind trying that real quick? Okay.
While she's trying to do that, maybe Jared can tell us the good news he has about where we are with the budget.
Absolutely. Jared, Mr. Croner?
Yeah, we can jump down to the non-agenda items real quick while she's trying to get on. Randy, can you scroll down real quick? Just, item A there is the budget timeline, and I'm put that out there for any of the board members to click on and review. We're not, no major changes from this year to the next. We will be, our next big budget decision will be in May, where the board approves a preliminary budget with final adoption in June. I am hoping to have a first draft of the agenda, or not the agenda, but the budget sometime at the end of March, so that we can present that to you in early April or late March. And we kind of will have those conversations as we're going along here in the next month or two. But that's kind of the timeline we're looking at. Just kind of a couple other highlights here as far as the 21-22 budget. The PSERS rate was set after our last Audit and Finance Committee meeting, but it was set for 21-22 at 34.94%, which is slightly lower than the 35.19% that we have been including in our budget projections. So a little bit of a difference, but we'll take what we can get in any given year like this. The healthcare rate, we had our consortium meeting January 11th. We are members of the IU28 consortium, where we always meet in January and kind of set the top range, the upper limit as to what our healthcare rate can increase next year. And for Indiana, that will be 3.85%, which is below the 6%, which we have considered our average, and which we include in our budget projections. So another good kind of bit of information for our budget going into next year. And then not directly affecting the 21-22 budget, but I did want to report back to the board on our real estate tax collections for 2021, which is the current school year. They came in at 94.7%, which is almost 2% higher than what we were budgeting for in this year that we knew could be very volatile due to coronavirus, unemployment, with everything else going on in the world right now. So that is, in my mind, a very good news. We were budgeting for and where it kind of affects the 21-22 is we were budgeting in our projections a 94% collection rate for 21-22, thinking that they would slowly increase over time. So we're already above where we thought we'd hopefully be next year. Not to say that that's an absolute, a lot could change from now till then. But for this school year, that higher collection rate means an additional $500,000 in real estate tax collected in this current school year over what we were budgeting for. So very good news for this year, and hopefully that will carry over into 21-22 budget as well. So the other things that I did want to talk to the Finance Committee about real quick is part of preparing the 21-22 budget is we give building allocations to each of our 6 school buildings. And we typically base those allocations on student enrollments, the number of teachers in that building, really drive where those allocations come from. And if we were to do that and go through our normal process, we would be basing the 21-22 allocations on our 2021 enrollment and teacher counts, which as a district, we know at this point are not very accurate. Or they're accurate for where we are right now. They are not typical for Indiana School District. We saw a lot of students go to homeschool this year. We have a lot of students on synchronous learning. We have extra teachers in the buildings to help with social distancing. And we also think we have a lot of kids in kindergarten or should have been in kindergarten this year who chose not to come because our kindergarten enrollments are way down. And having a conversation with Mr. Vukovic, what we are proposing is that the 21-22 building allocations be identical to this year's budget, because really 19-20 information was the last solid year of what I would consider a normal allocation that we have. It is keeping the allocations flat compared to where they are right now. There's no increase, but it's at least basing it off of the last normal year of enrollment and teacher information that we have. We can always change that as we develop the budget more, but what I'd like to do is give those allocations as a preliminary allocations to the buildings so that they can start working those numbers and building out their individual building allocations, for which I then include in overall 21-22 budget. So I wanted to present that concept to the committee here tonight and get your feedback so that I can get those out and get that started in the development of next year's budget.
Well, I think non-agenda items 1 through D are just really pretty good news. Pretty good news. So that comes as a very, I think, as a real positive outlook. Not sure yet, of course, because it's still pretty early. So that's great news. Does anybody have any problem or have any questions about the building allocations?
Yeah, Jared, you gave us a ballpark of what the effect of that real estate tax collection difference is, as far as how much more we'll get. How much more will we get how much more will we keep because of the PESers or not have to spend? And how much likewise for the healthcare? Do you have a ballpark number for that our expenses will go down?
Well, the budget projection for 21-22 that's been presented with all the other ones, again, is just a projection. The decrease, the projected increase in healthcare because of the 3.85 and not the 6% is about, I would say, about $150,000 less in healthcare.
Okay, that's good.
And then the PSERS rate, that's kind of really the most fluid one, because the projection doesn't take into account any of the retirements we have yet. It doesn't take into account any positions that may change, anything like that. But I would say, doing some quick math, we typically at this point are probably paying out somewhere around $8 million in PSERS. So that, with an increase, that increase is about 0.5%. So we're probably looking at somewhere of an increase around, I'd say around $40,000, and that would be if salaries were just staying the same, which we know they're not, and they can go up and down based on positions, retirements, fulfillments, or positions that we would create, those type of things, which we're still having those conversations. Because the current rate right now is 34.54%. So we're going up just, around 0.4%, which is, based on current would be about $40,000.
Is it 0.54 or 0.94? The agenda says it's 3494.
That's the rate. The current rate in this school year is 34.54%.
Oh, okay. All right. I didn't hear you say that. Okay.
Yep.
All right. Thank you.
Yes.
Joey, this is Terry. I was going to answer your question as far as the allocations. My comment, I guess, is, I definitely give kudos to Jared and the administration for proposing a flatline allocation budget. But I would also maybe ask that, is that what each of the building principals need? And not that I want to go up, but, is there a need to take some from one building, put to another because of different programs or anything like that a certain building may have?
And I don't want to speak for the buildings, Mr. Kerr, but a lot of that is factored in. The building allocations are not created just strictly on a student teacher basis. That's the biggest part of it. But for instance, the senior high gets a little extra money because of knowing that they have science classes that take experiments and those type of things. There is a factor played into that building allocation that takes in the different needs of the buildings already. And we try to strictly, this was created before I even came to Indiana to create more of a system approach to giving buildings allocations instead of trying to award one building, give them an increase in 1 year and not another building, trying to be fair between the buildings so that it was, a formula creates their allocations and not kind of a personal touch to it.
Okay, thank you.
Anybody else? On that?
Yeah, Julie. I wanted to follow up on Terry's question, Jared. What I understood, or the question that comes to my mind was, has the COVID caused any kind of a change in those traditional utilizations? You're using the 1920 budget as the base, which I'm fine with, but I think the question is, has our experience with the pandemic maybe changed it to the point where we would want to rethink those allocations on a per building basis?
And I think that certainly, sir, COVID has had an effect on it. I can tell you there's a small allocation given on, per student basis for field trips, which probably is not going to happen this year at this point. So that's kind of almost a savings to the budget, but they've also had increased costs for school supplies because we've tried to buy every individual student certain supplies that they can use every day in school so that they're not sharing scissors and markers and crayons and all that type of stuff. So one offset another. I know next year is probably not going to be 100% normal as we like to have considered, previous years. But I think as far as that goes, some of, this year was offset, savings was offset by an additional expense. At this point, and I don't, certainly if a building principal has other thoughts, I don't see there being much of a different next year because of COVID needing additional expenses. We've gotten a lot of grant money to pay for kind of what the buildings needed additionally for COVID as far as supplies, PPE, those type of things. I don't know that any of that has ever come out of the building budgets this year.
Okay, thank you.
Well, I think we'll have to a little bit play it by ear, and you'll have to keep us abreast, Jared, of what the variations could be. In 2020, what was your total allocation, the total for all buildings?
I don't have that right in front of me, the total. I would say it's probably around $750,000 between all 6 buildings, certainly with the senior high and junior high taking up the bulk of that.
Well, maybe if you can give us sort of some options about where the margins might be, so we can look at that a little later. So I think we're off to a pretty good start.
Yep, and I can share, I mean, certainly in the budget packet that the board gets every single year, there are pages that break down the allocations by building, how they're calculated, the total when it compares it from one year to the next. So I can share that with the board ahead of time if you would like.
Yeah, let's do that. And then last thing on the budget preparation schedule that you've highlighted here, what's our next big milestone that we have to?
The next big budget vote will be the first meeting in May where you approve the preliminary budget. But before that, probably sometime in April, we can either do it at the Audit and Finance Committee meeting in April, or we can schedule a special night where we do kind of the budget presentation as to kind of the first draft of it. So.
Okay, and then we can decide if we need a specific budget workshop, we may need to do that again. Okay, thank you, Jared. That's a lot of good planning, good news. So now we'll see if we can go to Ken Dorchak, please. Can't hear you, Kim. Maybe she has a brand new computer too.
Yeah, Kim, I'm going to walk you through to make sure that your microphone is selected, because sometimes if you have a headphone or maybe there's a Bluetooth or something like that on. So when you're looking at the bar along the bottom, you kind of see where you can hang up and your microphone mute and all that kind of stuff. Are you able to mute your microphone? Okay, good. I see it. Okay, go ahead and unmute it. Okay, and then go the whole way to the right. There's the three dots, vertical dots there, say more options. So if you kind of click on that, that should expand it. And I think it's in settings. You should see where it says audio there. I think it'll be the first one that's kind of selected. And the microphone, if there's more than one microphone to pick, you can select that. Is there more than one there?
Yeah, let me.
There you go. We can hear you.
Oh, can you hear me? I had to change.
I can hear you. Yep.
How am I doing now?
Yep, I can hear you very well.
Great. Oh, great. Thank you. I needed that. Thank you for the IT help, Randy.
Okay.
Can you see me too?
I can see you too. Yes.
I didn't screw up the video, right?
No, and that happens every once in a while. There's so many devices now attached to computers that sometimes it just decides to pick the wrong one. So.
Okay. Thank you so much.
It's a circus. It's a circus. You buy the thing, you pay the money, you do this, and it doesn't work.
I am the least techie person that you have on this call, so I'm going to apologize right now to everyone, especially Randy. But I can, if you can hear me and you'd like me to go ahead, I can do that with my presentation now, or I can wait.
You go right ahead.
Okay. So Jared, are you putting it up or something?
Yes, Randy has it to put up. He should be putting it up right now for you. Great,
thank you. All right. So before we get started into the numbers, I'll just point out that obviously we're talking about the audit for the year ended June 30, 2020. So now you've been discussing going forward, you've been discussing 21, 22. I'm going to take you back to the 19-20 year, and we're going to look at some highlights, financial highlights from that year. And before we get into the numbers, I'll just point out that we issued a clean opinion on the audit report, an unmodified or a clean opinion on the financial statements. So that's certainly good news. We had no internal control deficiencies that we identified in the report, also good. And as you know, every year we do what's called a single audit at Indiana School, meaning because we have federal expenditures in excess of $750,000 a year, we're required to look at federal programs for compliance. So aside from the numbers, we choose a federal program every year and we look at it for compliance with federal rules and regulations. This year, in 1920, we looked at the nutrition program, and we issue an opinion on that as well. We issued a clean opinion on the nutrition program this year. So we had no findings with regard to nutrition for 1920. So all good news there. And that's really a testament to your management and your business office staff to Jared and the entire staff. They do a terrific job. If we go to the first slide, I just kind of like to remind everyone about the funds that we're dealing with here at the district. This is old news for some of you, but if there's anyone new to the audit this year, the funds that we're looking at whenever we're doing the audit, obviously the general fund, we're going to spend more time on that tonight. We've got a capital projects fund. And if you look in the audit report itself, there's one column that says capital projects fund. But as you know, internally, we've got two accounts that make up that capital project fund. We have a capital reserve account, which is more like a savings, like a long-term savings account for capital projects or capital costs. And then we have a capital project, a separate capital project fund. I sometimes call it the construction fund. It's usually more temporary in nature, and it's usually in play when we have an ongoing construction project. We're going to take a look at those two funds individually on the next couple of slides, and you can see what happened in those funds in 1920. And then we also have a debt service fund, and we're going to spend more time on debt tonight too, but the debt service fund itself is really just a pass-through. The general fund transfers money into the debt service fund, and the debt service fund makes the bond payments. So that's really all that's happening there. Those are our governmental funds. If you go to the next page, we also have a proprietary fund here at the district. Proprietary funds operate like a business. We charge a fee for service. That's our food service fund here at Indiana, our cafeteria, our food service fund. We'll spend a little more time on those numbers tonight as well. And then finally, we have one fiduciary fund, and that's our student activities account. So these are funds, it does not represent district money. The district is holding money in a fiduciary capacity for somebody else, in this case, the students. So we do have our student activities fund. I'm really not going to spend any time on that tonight, other than to mention at June 30, 2020, we had about $123,000 in student activity funds between the junior high and senior high clubs. So that was at June 30, 2020. Okay, we'll get into the numbers a little bit here. If we go to the next slide, I always start out with fund balance. So what's our fund balance? Now, this is where we stood at a point in time. So at June 30th, 2020 versus June 30th, 2019. So the first two columns represent our general fund. The gray bar is where we stood at June 30, 2020. So our fund balance was $8,058,721. You can see that's a nice increase over prior year. The red bar is the prior year of about 7.5, almost 7.6 million. So that increase in our general fund balance of about 470 grand represents our current year profit. So our revenues exceeded our expenses in the general fund this year by about $468,000, and that feeds right into our fund balance. And we're going to get into more detail on this, obviously, but I will mention, I'm sure you recall, a decision was made by the board after year end to transfer $950,000 from the general fund into the capital reserve fund, saving for future capital costs. This $468,000 profit remains even after that transfer out of general fund. So we're still to the good there, revenues exceeding expenditures even after that late transfer. If you look at capital projects, the other two columns here, our fund balance also went up $9,522,000 at June 30, 2020. Last year was just over, or 9/30/19 was just over $9 million in the capital projects fund. So we had an increase there as well, obviously due in large part to that nice transfer from the general fund. But we're going to take a closer look at that on the next slide. So if we go to the next page, these are those capital projects funds I'm telling you about. So we've got, boy, my slide's a little off center there. So we've got our capital reserve fund. And this fund, as I said, is more like a long-term savings type of reserve fund. So the revenue, the $15,000 in revenue represents interest income. And then we have, we had expenses out of this fund, capital costs that we paid for in 1920 out of this fund of about $244,000. The transfers in, that's our big number. And that's where the capital reserve gets their revenue. General fund transferred in over $960,000. As I said, that 950 of that was just done after year end. I think when you guys were looking at where the year ended up and you saw you had the room to move some money, we did that big $950,000 transfer after year end. But even prior to that, during the school year, we had transferred over $10,000 into capital reserve. So that's taken our fund balance in the capital reserve account way up, or our cash, to about 1.7, almost $1.8 million. at June 30, 2020. Now, the Capital Projects Fund on the right, or sometimes, like I said, I call it the Construction Fund just to differentiate it. That fund is holding, if you recall, the Series 2016 bond proceeds. And that bond was taken out for an elementary construction project that had been suspended in prior years. But we are starting to use that money towards elementary renovations and other renovations. So that's the money that's sitting in that construction fund is the bond proceeds from the 2016 issue. So we had revenue in this fund of about $183,000. That's interest on those monies. We did spend about $440,000 out of that construction account. Again, it was largely on the elementary entrance project, the elementary school entrance project. And another big one was the senior high life skills room. So those were some construction costs that came out of that fund this year. So still you can see it at the end of the year. If you go down to the ending fund balance, we've got about 7.7, almost $7.8 million in the construction fund remaining at June 30, 2020.
Kim, can I just mention something real quick?
Sure.
The interest there of 183,000. I do want to mention, though, it is a nice sum of money. That was a result of CDs being purchased and coming due during 1920 that were bought in pre-COVID. So the interest rates on those, some of those CDs were as high as 2%. We are not seeing that right now. So the interest going into 2021 is not going to look like that at all. We're aggressively trying to invest the best we can, but that interest there is definitely a result of pre-COVID interest rates, which we all know have crashed since then.
Thanks, Jared. That's a great point. Yeah, these funds, these construction funds are invested with Pliget. And as Jared mentioned, much of it is in CDs, laddered CDs that are maturing every year, every so many years. So, but that's a very good point. We're not going to see, such high interest numbers in for the year ended 21. I see a question.
Prior slide, please. Just the one immediately prior.
The prior slide on fund balance.
Yeah. I hope Jared will be able to email us these slides.
I can email them to you, Madam Vice President. They're also attached to this agenda as well.
Oh, are they? Okay.
But I can email them to you, yes. But they're attached to the Audit and Finance
No,
agenda.
I know that, but I want them emailed to me, please.
There's the prior slide. Julia, the fund balance slide. Were you asking for that?
Yeah. So in the capital projects, you're saying we have
the capital projects are the two combined.
So you're saying we've got 9 million.
9.5 in fund balance between the construction account and the capital reserve savings account.
Oh, I was going to say, how are you getting that?
The two combined. So then we go to the next slide and we break those two apart.
Okay.
So you can see what's happening individually in those two funds.
Okay, I didn't hear that. Okay, thank you.
Sure. So yeah, if you go ahead, Randy, if you want to go to the next slide, then you can see at the end that fund balance 1.7 plus the 7.7 gets us that 9. Okay. If you want to go ahead to the next slide, Randy, we'll start looking at the general fund here. We'll take a closer look at our general fund for 1920. So I always show you this pie chart, the sources of revenue, the general fund sources of revenue. So for 1920, you can see 50% of our revenues coming from property taxes, or almost $27.8 million coming from property taxes. The state subsidies or state funding make up another 35% of our revenues at about 19.2, almost $19.3 million. Then to a lesser degree, we've got other local taxes of 5.6 million. Primarily here, we're talking about earned income tax, delinquent collections, realty taxes. So those are making up our other taxes, basically all the taxes besides property taxes. And then we've got our federal subsidy, 2%, 141 coming from federal dollars. And then finally, our other local sources are about 6 million. Here we're talking about that comes through the IU. Now, some of this money is actually money, but because it comes through the IU source, so for the IDEA B funding, A big part of this 1.6, about 400,000 of it is the Idea B fund that comes through the IU, which is actually dollars. 130,000 of 1.6 is the pre-cam state funding that comes through the IU. And then also making up that 1.6 other, we have interest income, we've got tuition from districts, funds, things like that. That's what's kind of in those numbers. If you look at them, you see the total revenues coming into the general fund for the year ended 6/30/20 were 55.1 million. That was 54.8 last year. So we did have an increase, but less than 1%, less than 1% increase in revenues. But we did have an increase in overall revenues of about $326,000. Taking a look at this, we had increases in state subsidies and property taxes. Increases were offset increases in earned tax, really transfer tax went down. Some other local money went down, like tuition from other districts. Obviously, some of this has to shut down in March. So, you know, some revenues, for example, tuition districts decreasing, earned income tax, really transfer tax decreasing, while property taxes went up and some state subsidy funding went up. So they kind of offset each other. At least we still went in the right direction. We still went up, but a very small percentage increase over prior year in revenues. If we go to
Jared, can I ask you a quick question? On the state and federal subsidies, as of today, where do you think we're going to be this coming year with all this federal stimulus coming through the states?
Well, with the state subsidy, they will probably pretty much remain the same. We're not seeing any significant increase in our basic ed or special ed allocation. We'll see a slight increase because of the retirement revenue, which always goes up as the rate goes up. Federal subsidy, you will see a pretty fairly large increase in that, as we one of the biggest grants we've already gotten was the 200 and some thousand grant, or $228,000 grant that we had to have spent by the end of October. So that'll pretty much be counted, it will be counted as revenue in 2021. We also have our ESSER funding, which was 200 and some thousand that we are splitting over 2 years. We just got the $1.7 million, which we have until 2023 to spend. So you will see some of that being recognized as we spend some of that this year. So you will probably see the federal subsidy increase by $500,000+ till we are done with 2021.
That's a good question for sure for 2021. There's active money.
Well, that's so those numbers are holding. You had reported that to us on the email, but those. Okay, that's good news. We need it.
Yeah. So if we go to the page, take a look at the expenditure. Okay, so we talked about where they're coming from into the general. Now we'll take a look at what's going in 1920. So general expenditures by function. We expect to see the of our pie here going to instruction. 5% of our overall expense, or 35.4, going to the instruction function. Another 20%, or almost 14 million, support services. Non-instructional services, over $1 million. Non-instructional services, primarily student activities, things like that, events, things like that. And then our 4.2 million transfers from the general to other funds. Okay, so taking a look at the bottom, see our expenses. Again, pretty consistent overall, increased about 1%, not a huge expenses, but I can have some kind of functions here like we did with. So instruction costs went up about $5,000. Support services came down $725 over the year. So we've got some fluctuations there. Non-instructional came down about 100,000, which you back to student activity, you know, those revenues on with the shutdown, and transfers, as you might imagine, went way up. Transfers were up about $1 million largely because we transferred that $950,000 into the capital reserve fund. Last year, we only transferred about 250,000 into capital reserve at the end of 18-19. So 19-20, a big transfer out to capital reserve. Also in those transfers, that 4.2, the 960 went to capital reserve, and 3.3 million went to debt service, went to the debt service fund to pay the bond issues. That's a little higher than prior year. Prior year was about 2.9 million. So transfers going out of general fund, whether it be for debt service or to capital reserve, increasing in 19-20. But instruction costs also increasing, salaries and benefits, supplies, things like that. But support services, some areas in support services that came way down: transportation, big decrease in transportation. That's part of support services. Administrative costs came way down. Instructional support, pupil health. So those are some of the areas that make up support services that came down, where costs came down in 19-20. So again, we've got some things offsetting, some areas up, some areas down. We end up overall pretty consistent with just about a 1% increase in expenditures overall for the district in 19-20 over 18-19. If we go to the next page, we'll take a look at debt. I mentioned those transfers out. A big part of that's debt, right? About $3.3 million was transferred to the debt service fund to pay the bond payments in 19-20. So I always show you this slide, this debt service slide. So on the left, we're doing a roll forward, right? So at the beginning of the year, at July 1, 19, we had outstanding debt of $33,709,000. We issued no new debt in 19-20. We retired or made principal payments of almost 2.5 million. So that brought our outstanding debt down to 31,224,000 at June 30, 2020. The current portion of that, or the part the principal we expect to pay within the next year, we call that the current part. So the principal we expect to pay in 2021 totals 2,676,000. And I always like to point out the interest expense that was paid in 19-20 on this debt. So the interest expense is that last number there on the left, $806,185 in interest expense on this outstanding debt and paid in 19-20. On the right, I'm just breaking down the different series of debt, the different series of bonds that we have outstanding that make up this 31.2 million. So you can kind of go down through the years. Something new I added this year that I just kind of wanted to show you. I'm letting you know when each one is set to mature, right? So if you look at the highlighted ones, the Series 2015 bonds and the Series 2014 bonds were set to mature in September of 2020. So that should be behind us already, okay? But then you can kind of see I still noted the maturity date for each of these, coming up. So, 2022, we should be able to get rid of the Series 2012 bonds, 2023, the 2013 bonds. Now, I'm not sure what kind of refinancing plans are coming down the pike. Might change this up a little bit. We might do some refinancing. I'm not sure. But this is where it kind of stood at June 30, 2020.
Kim,
Yeah.
this is Walter. I'd asked Jared to chime in on that because we actually did refinance a little over $8 million here this past board meeting.
Okay, I thought you might have something like that in the works, so that might change this up a little bit.
Yeah, Kim, we just refinanced all the 2012, 2013, and a portion of the 2015A.
Okay.
We're set to close next month, early next month on that. So.
Okay, so that's going to change this up a little bit.
That saved us about, what was it, how much was it, Jared? 200 it didn't save us, but it in the future, what was it, 250,000 or something?
It saved us like $240,000 in interest over the next 7 years, with 96,000 of that being recognized this year.
That's terrific. That's fantastic. Yeah. That's why we do it. That's why we do the refinancings. Absolutely. Whenever we can have those savings. So that's good news there. Okay, if we go to the next page, we'll stay on debt just for a minute. On the next slide, this is something that always comes up. Oh, that's kind of weird. It's black. The screen is black, but you can still see the red line there. So this kind of shows all of our districts, and it's a question that's come up in the past. How does our debt position compare to our other districts? We do audit a number of local school districts. And the question we always pose is, what percentage of our overall expenses are going to debt service? Okay, so what percentage of our pie are we spending on debt service? And now when we look at this, we're saying not just what percentage of general fund expenditures, but governmental fund expenditures. So this picks up even, construction or capital reserve or capital costs as well. So when we take all of that into account, what percentage are we spending on debt service? And Indiana, I don't know if you can see the numbers because the screen is black. On mine, the screen is white. And I've got the actual percentages at each dot. Indiana's percentage, that blue diamond, is actually 6.05%. So you can see Indiana's the big blue diamond, and it's 6.05% is where
you're saying about what, $6 for, or 6 cents on every dollar? Is that what you're saying?
Yeah. Yes. Okay.
And
that's the total. That's the percentage of all of our expenses that's going to debt service. And you can see you're kind of at the lower end of our. I'm not seeing my presentation anymore.
something happened, we lost it. But Kim, my question about this, because this is a really key number for me. I think we went down from last year.
Yes, I think so too. You know what? I don't have last year's in front of me, but I feel like, yeah, last year's was in the sixes, but it was I think it was a higher percentage. There it is, Randy. Thank you. So you can see the 6.05%. I don't have prior year in front of me, but I do feel
it's a little bit higher, which is
it was a little higher.
that surprises me because we paid out more in debt service.
But maybe our overall expenses went up. Our overall expenses increased. So even by paying more in debt service, if our overall expenses increased even more, it's a lower percentage overall. If you think about it, we probably had more construction costs this year. We probably had more capital costs this year, and things like that factoring in. So our bottom number, our total expense was higher. So that might be why the percentage is down. But compared
you would say we're below a little. We're not overly leveraged. I mean,
no. And the other thing we always point out here, and this question's come up in the past, what's a good benchmark, right? So we're at 6.05%. So what does that mean? Well, you can see compared to our other districts, you're kind of at the lower end, which is a good thing. But then we found a benchmark. If you remember a few years back, Jamie Doyle from PFM actually sent us a ratings point system that they use when they're doing bond issues and when they're rating bonds and things. And this point system shows that anything under a debt service percentage under 8% is deemed a very strong rating. So we're less than 8%. So that's kind of the benchmark that we've talked about over the last few years. If you're under 8%, at least from a bond rating perspective, that's deemed a very good rating or a very strong rating. So that's maybe the benchmark to keep an eye on, is that, kind of staying under that 8% if we can. And you can see our highest district this year is Conemaugh Township. They're at 18.7%, but that's odd. They had, they just fell into a year where they had a huge principal payment. Like they just, every so many years, sometimes if you don't have it leveled out perfectly, you'll hit a year where you make a huge payment in one year. And that happened to Conemaugh Township this year. They're not usually at 18%. They're usually down around 10 or less. So that's kind of an oddball there. But, and we don't have all of our districts on this slide because a couple of them don't have debt, or they only have maybe their share of the VOTEC debt. They don't have bond issues or anything. So we're just showing the 15 districts that we audit that have bond issues and things out there, similar to Indiana School at June 30.
well, what's the deal with that first one? That GS, what is it? GS? I can't read it.
Glendale. That's Glendale School District. Yeah, they just have a very small percentage. They must be down to the end on one of their bonds. I don't audit Glendale personally, so I'm not sure. But they must be down to the end on one of their bonds, or maybe that's just one of those energy saver projects that they're getting to the end of, and they've got pretty low percentages. But Conemaugh Township's the one that threw me, because I do work on Conemaugh Township, and they shouldn't be that high, but they just had an oddball year with one large one.
Maybe it means they're not borrowing enough money.
Yeah, I'm not going to tell them that. That's not what I'm going to tell them. But so that just kind of gives you a little bit of comparative there. If you want to go to the next page here, we'll take a look at how we did compared to budget. So this looks great this year, I think, because nobody budgeted for COVID. I don't know why y'all didn't think of that. But so our expenses are way under budget, came in way under budget, and our revenues came in over budget though, which was nice. So if you take a look, the gray bars are our budget, and the red bars are our actual numbers for 1920. So revenues, we budgeted to bring in 54,826,000. We actually brought in 55,129,000. So we've got a positive variance there of about $302,000. Really in all revenue categories, federal, state, and local, we came in a little over budget in each of those categories. Expenditures, though, that's our big variance, right? So we budgeted to spend almost $56.7 million. We actually spent $54.6 million. So we came in under budget. We underspent our budget by over $2 million. Again, that's every category, as you might expect, just with all the changes in 1920 that we did not budget for. The one area that we overspent was the transfers, because we didn't budget for a big $950,000 transfer.
Yeah, I think, Kim, just some of, I mean, you touched on it before, some of the big expenditures that didn't come in on budget were transportation,
right?
Contracted services, which was, one of the big ones. As of March 13th, we no longer needed substitutes in our schools. So we saved significant money there. We also no longer needed to pay certain overtime for, custodians, which we have a lot of spring events that take a lot of extra time on our custodians to get to prep the fields, to clean up afterwards. We didn't have that cost anymore. So coronavirus really did, there's a lot of bad that goes into it, but it really did cause the district to be able to save a lot on expenditures, even if it was just for the last 3 months of our school year.
Right. Absolutely. That made a big, and we're seeing that at every district. That made a big impact on their budget to actual comparison, because the last quarter of the school year just was very different. So we were able to save, and as Jared said, thanks to some of those savings, we were able to transfer that $950,000 into capital reserve, and still end up in the black for the year with general fund, which is great news. If we go to the next page, we'll take a look at our food service. Our food service fund, also impacted, of course, by the shutdown in March. So we can see our revenues are down. Revenues coming in 1920, $1,276,000. Last year they were $1,344,000. So what I'll mention here is, if we broke this out a little more, sales are actually down $125,000, as you would expect, right? There's, the paid meals and the reduced price meals and things. With the shutdown, we weren't getting the money from sales, but other revenues increased, like donations and government funding and subsidy money increased. So at the end of the day, our revenues are down, as you can see here, about $68,000. So sales way down, but subsidy actually, government subsidy went up. So that kind of offset a little bit, but revenue is still down, of course, as we would expect. Expenses down about $10,000. We did keep serving meals. We did continue to serve meals through the summer. So expenses down, but not tremendously. So we do end up with a positive or a net income position of $36,000 for the year. Jared, do you want to chime in? I'm sorry.
No, I was just going to, you touched on that the federal and state subsidies went up, mainly due because we did continue to serve meals after the shutdown.
Right.
And those were free to students, but we received reimbursement through the federal and state government for those. So that's why those were mainly up last year. And we were having, up until March 13th, a banner year in food service department. So despite losing some money during the shutdown because of serving meals was not profitable, we did continue to make a profit in 2020 because of the wonderful year we were having prior to March 13th.
Right. To Jared's point, you can see the 18-19 profit was about $96,000. This year's profit $36,000, but that's terrific, as Jared said, considering the shutdown. We still ended up in a profitable position for the year. So we end up with a fund balance or a net position in our food service fund at June 30, 2020 of the $357,704, that bottom number there. And that's an increase over prior year, thanks to our profit for the year. And that is all I have. That is a very quick and dirty overview of 1920. But again, a big thank you to the business office staff, to Jared and the whole staff for the great job that they do every year. And they had some turnover in key positions at the end of the year, just in time for the audit. But the new folks are doing a great job, and Jared kind of oversaw everything, made sure that everything came together for us. So we truly appreciate that. It went very well, and it's a big thanks to them. So are there any other questions or anything I can talk a little more about on this? That was kind of quick.
Terry Kerr.
Yeah, thanks. First, I'll say a good presentation.
Thank you.
Most of it, so thanks. But my question probably goes to Jared mostly. I put it in the chat room. You're probably about your third slide when you show the 7.76 million being available in the capital projects. We, from what Jared answered, we haven't paid a lot of the expenditure or the cost to the contractor that's built the East Pike addition. So that 7.76 is going to go down. And Jared, I'm going to say down closer to just above 6 million or something like that.
Yeah, I would say probably just slightly above 6 million. I mean, as of June 30th, we probably had written, and I don't have that right in front of me, a couple checks to some of the contractors, mainly the GC. He was the main one who had already been in there working. But the entire East Pike project is a $1.6 million project. So you probably, as of June 30th, 2021, that number will be closer to the 6 million.
Okay, thanks. I think that's important for everybody to realize that, a month from now, whenever we ask Jared how much money's in capital projects and he says 6.1 million, where'd all the money go? That's where it went.
Yeah, because we had the East Pike project, and then we also had the high school life skills project that mainly took place after June 30th.
I don't know if we start the Eisenhower project this year on the entrance, but if we do, it's gonna. I mean, it'll go fast. It's gonna go fast.
That's a good point. That 440,000 that you see coming out, that expense that you see coming out of capital projects was primarily the East Pike entrance project and the senior high life skills room. That 440,000 were costs related to both of those things. But as Jared said, the bulk of that's coming after year end. So this was just kind of getting it started. Okay.
Yeah, we've used the money to improve our assets. So, it's overall, I think it's not a negative at all. It's just
right. And that's what it's there for. That's exactly what it's there for, is construction. So that's what it's restricted for.
Yeah. Any other questions for Kim? Kim, thank you very much. This is the meeting of all the meetings all year. This is the one I look forward to the most, because I just feel that everybody should read your audit report at least one time. You need to read it about 20 times.
That's why I do this. That's why I do this PowerPoint, because going through that audit report is a little cumbersome. But no, I appreciate it, and I'm glad if it's helpful. And we try to kind of hit the high points in this PowerPoint, and to avoid going through all that detail in the audit report. But certainly that's what the audit report's there for. Any more detail, you're going to find it in the footnotes and things like that. So, but I appreciate it. Thank you so much, Julia, and to the whole board for having me and taking the time with me tonight. Sorry for my technical difficulties, Randy. But if there are no questions, I'm going to exit the meeting if that's okay.
Anything else for me? Thank you very much.
Okay, thank you all. Take care.
Bye-bye.
And for the public, the copy of the agenda, or not the agenda, but the audit report is attached to the audit and finance agenda tonight as well. After the board approves it, if they do approve it at the meeting tonight, it'll be posted on our website for the general public to view.
I would just like to have a presentation she just did emailed, so it's easier for me to print it off. I don't have to.
I already sent it to you, Madam Vice President. I sent it to the entire board.
Thank you. Okay, we're on the stick. Okay, thank you very much. Is there anything else, Jared, that you have for tonight? I think we've sort of whipped through the whole agenda.
No, I think the only other, just real quick, there's another agenda item for tonight other than approving of the audit is, and we've kind of been touching on these over the past 2 months, is some assessment appeals that we are looking to get an appraisal review as well as an oral appraisal on some different properties that we're asking board approval to spend at a max $5,500 between those 3 properties. And there's an agenda item tonight for that.
You mean on the board agenda?
On the board agenda, yes.
Yeah.
Under
Does anybody
audit.
have any concern about that? I mean, to me, it just seems as though this is what we have to do. We're kind of used to this drill at this point. But does anybody have any concerns about that? The properties are the Super 8. What's the other one?
Copper Beach and Campus Crest.
Campus Crest, yeah. Well, I mean, it is what it is, and we have to be well prepared. We can't go in blind. So I think we have to do this. Any questions about that? Okay, it's 6:28. Mr. Vukovic, I would like you to take note that our committee meeting ended in a timely manner. So
Yes.
now I guess we go to executive session.
Yes, ma'am. See you there.
Thank you.